Hi, everyone, and welcome to episode 27 of The Bottom Line. As always, I'm joined by my co-host Syed, and we have another special episode ready for you guys today. As always, we're going to kick things off with Syed's tech updates, and we're also going to talk more about the markets because, as you can probably tell, there's been a lot of turbulence going on. So we're going to first talk about how the Dow actually tumbled 700 points today, which was its worst drop since last fall in October. We're going to talk about Joe Biden's speech, which reflects concerns that rising prices are actually here to stay in 2022 and how that will hurt the Democrats. And we're also going to reference another article in which WHO officials say that we could have COVID under control next year, quote unquote, if we're really lucky. So we're going to dive into these three articles, and we're going to end things off with our stock picks, so recapping last week's picks and providing new picks for the upcoming trading week. So with that being said, Syed, the floor is yours, and let's kick things off with the tech update.
Thank you, Deepak, for the introduction. For this week's tech update, I have a lot of stuff to cover, so let's get started. I'm going to start out with PrintNightmare. So talked about it briefly in episode 26, but Microsoft was able to release a patch for it. Unfortunately, though, however, researchers have found a way to bypass the fix in the attacks. So I'll leave the article in the description below, but the incomplete initial release on Tuesday was followed up by a later version which covered the remaining unpatched products. But within hours of the release, though, the researchers took to Twitter to show proof of concept attacks on past systems, which means they're effectively still vulnerable to local privilege escalation and remote code execution. So so Microsoft's quite busy with this. Next up, just from today, so Monday, July 19th, oil giant company in Saudi Arabia called Aramco, they got hit by a 1 terabyte data breach. So this is a developing story, and hackers are trying to basically sell the data on the dark web. And then there's also a ransomware attack on Campo, Cornoy, and O'Neill PC, which is essentially known as Campo. It's a U.S. law firm counseling dozens of Fortune 500 and Global 500 companies, and they disclosed that they had a data breach following a February 2021 ransomware attack. We talked about this in February 2021 too, the ransomware attack, and now they released that they had a data breach. So you can read more on that in the article. Next up, there was a misconfigured AWS bucket exposed to 421 gigabytes of artwork archive data. So the team of IT security researchers at the WizCase team discovered a misconfigured Amazon S3 bucket on the cloud belonging to an online art retail service artwork archive. The incident affected around 7,000 customers, including galleries, artists, and collectors. And then more on Microsoft. So basically, this is back to Printspooler. So Microsoft is advising customers to disable Windows Printspooler to safeguard against another new vulnerability. So there was a PrintNightmare that was one of the vulnerabilities associated with Printspooler, right? But now there's a latest flaw which is being tracked under CVE 2021 34481. So you can Google that, and once again I'll put that CVE in the description below. But it was discovered by Jacob Baines from cybersecurity firm Dargos. And according to Baines, this latest flaw in the Windows Printspooler service was reported to Microsoft in June, with Baines saying that he was surprised Microsoft has now decided to warn of the vulnerability because it was very abrupt and not related to the deadline he gave them, which was August 7th, and nor was it released with the patch. So Printspooler is taking over right now pretty much with all these 0 days and vulnerabilities. Next up, a few episodes back, so I believe it was in March or April, we talked about Juniper, and I actually mentioned it in my stock picks. But Juniper, essentially, for those of you that don't remember, it's a company like Cisco. So Cisco's at the top of the networking world, right? And when it comes to networking and routers and all that stuff, Juniper is right behind it. So it's like number 2 in that world of tech and security. So Juniper has shipped security patches to cover numerous vulnerabilities across its product portfolio, including a series of critical bugs in third-party software using Juniper's product portfolio. So the most important of the vulnerabilities is CVE 2021 0276, which has a CVSS score of 9.8. So the CVSS score basically ranks vulnerabilities, and the higher the number, the more critical the vulnerability is, and it's the highest it can go is 10. So this one's a 9.8 out of 10, so it's really critical. It's a stack-based buffer overflow in the Juniper network's SBR carrier with EAP, and an attacker could exploit sending specific packets to cause a denial of service condition or to execute code remotely. So you can read more on this, but I thought this was interesting. And then speaking of networking, there's also news from Cisco coming out that they disclosed details of a critical Advantech router tool vulnerability. So basically in their RC net, it was affected by 7 vulnerabilities, a majority of which have been assigned a critical severity rating. So an attacker can exploit the vulnerabilities to execute arbitrary JavaScript code in the targeted user's browser by getting them to click on a malicious link, whether that be by phishing or social engineering, right? And execute arbitrary OS commands using specifically crafted HTTP requests, right? Or execute PHP commands via malicious HTTP requests. Any type of payload like that would work. And many of these security holes can be exploited if the victim is not logged in. So this is interesting news there. And please, if you are using any of these products for your personal office or whatever, be sure to be aware of this. And whenever, as soon as the patch comes out, be sure to update your softwares and the hardwares too. And then there's new Chrome 0 day being exploited, and that's from July 16th. So Google is aware of reports on an exploit for the CV 2021 3056.3, and it exists in the wild. And basically, the vulnerability was anonymously reported to Google's security response team. And Google didn't share any details on the in the wild exploitation, so that's unfortunate. And but essentially, the target OS or the indicators of compromise weren't shared either. So like, it doesn't really help because defenders can't look for signs of infection. So the most we can do here is like, we can patch, right? Whenever an update comes out, be sure to update your Google Chromes. That's all I can say for here to stay safe. So yeah, if you're using Google Chrome, be sure to update your Google Chrome as soon as an update comes out, because it's gonna patch the 0 day. And then there was a attack on an Iranian railroad. There a cyber attack on an Iranian railroad. So on Friday, July 9th, Iran International reported a system-wide disruptions on its railroads, which was probably due to a cyber attack. And now it appears that the attackers had penetrated the system at least a month earlier. So this is interesting. And once again, you can read the article. I'll leave it in the description below. And then obviously we all know about China's role in crypto and all that stuff, but it's also going on in the cyber world too, as US and the allies are officially accusing China of Microsoft Exchange attacks. So China on today, on Monday, was accused by the United States, the European Union, NATO, the United Kingdom, Canada, Australia, New Zealand, Japan of conducting malicious cyber activity. And in a statement, the White House accused China of using criminal contract hackers to conduct cyber operations. And these threat actors allegedly carried out cyber attacks for their own personal gain, including activities involving ransomware, cryptojacking, and cyber-enabled extortion. So this is and they're basically using multiple tech groups have been exploited with the Microsoft Exchange vulnerabilities, which we talked about in the previous episodes in June and May, around that area when the Microsoft Exchange vulnerabilities were being leveraged. And also in March as well. And then China's basically leveraging these, and any type of Microsoft 0-day exploit, they're leveraging them and attacking the allies, basically. So US and the allies. So cyber war basically going on. I could say a cyber cold war with all this, and obviously we know the crypto news, right? And then speaking of crypto, FC Barcelona the famous football, aka soccer club, is set to be in talk to with the crypto firm about shirt sponsorship. So the club, one of the biggest and most successful in the world, as many of your viewers know, are soccer or football fans, right? They probably know. They currently have a deal in place with a Japanese e-commerce giant, Rakuten, and the firm operates the Rakuten wallet crypto exchange in Japan, but its global interests are currently limited to non-business areas. However, the Barcelona crypto connection could deepen yet further once the Rakuten deal expires in summer next year, per reports from the news agency. So that's something to look out for, and you can see more and more crypto exchanges and crypto coins influencing sports, right? Like we saw the New York Giants player Saquon Barkley, who's accepting Bitcoin, and he's expecting payments, right? His future payments are all going to be in Bitcoin for his endorsement. So you can see how crypto is slowly taking over because maybe the fear of inflation and stuff like that. So it's interesting to see, and I'm sure we'll see more of this. But yeah, this wraps up my tech update for this week, and yeah, we'll have more for you throughout the week and next week.
All right, perfect. So thanks so much for that tech update, Syed. So I have 3 articles that I want to actually reference right now. So first of all, I'm going to talk about this article that obviously we're going to provide in the link in the description. But the article is titled "The Dow Tumbles 700 Points for Its Worst Drop Since October as Investors Fear a COVID Resurgence." Okay, so U.S. stocks fell aggressively on Monday on concern of rebounding COVID cases would slow global economic growth. Okay, that's the key word, global. Not just relegated to the States, not just relegated to Canada, but global trade. Right? The selling picked up as the session went on as the Dow Jones Industrial Average had its worst day since last October. The Dow dropped 725 points, or 2.1%, in a broad-based rout that sent all 30 members lower. At one point during the session, the Dow was down almost 1,000 points before recovering some ground at the close. Obviously, this led into the other indices dropping as the S&P fell about 1.6%, led by energy, financials, and industrials. And the NASDAQ actually dropped 1.1%, posting its 5th straight day of losses and worst losing streak since October. Meanwhile, the 10-year Treasury yield reached a 5-month low of 1.17%, exacerbating fears about the slowing economy. So again, the narrative has changed, right? Before there was fear that the rates rising too fast. Now that the rates retreating, investors are fearing that, okay, why is the rate retreating? It's probably because we're not recovering as fast as we anticipated. So there's a different narrative going around here. And then the small cap, Russell 2000 dropped 1.5%, and briefly dipped into correction territory on an intraday basis, almost down more than 10% from its March high. Right? So really what's happening here is that you have 2 concerns coming together. So there's concerns about the market technicals and then concerns about growth. And that's telling basically what all the asset classes are telling you. So for the last little while, we've seen, I think going back to probably around March, I'd say February, March was the top for the tech stocks. Like you would think about Palantir, Snowflake, JFrog, all these up-and-coming tech companies. They've seen a massive drawdown, some of them down 60, 70% from their high. But really, it was relegated to the growth sector, right? Now we're seeing it actually infiltrating the broad market. So now you're seeing the S&P indices falling. You're seeing the Dow Jones, which is the value play that all investors flocked to when growth was going down. That's coming down. And then the NASDAQ, obviously, is also showing a little bit of red for us, right? So there's concerns that we have reached an intermittent top. Obviously, I think long-term, everything goes up higher. I think that's still very valid. But if you think about where we've come from, S&P was down to about 2,400 last March, if I'm not mistaken, and now we were at one point almost at 4,400. So it almost doubled for all intents and purposes. Not quite, but it almost doubled in just over a year. So clearly, it seemed like it was overextended. A correction was due, and we are seeing that now. So again, these sort of corrections don't happen for no reason. There's usually some narrative that plays into it, and right now, we're seeing COVID cases a rebound in the States this month, with the Delta variant spreading amongst the unvaccinated in particular. So the U.S. is averaging nearly 26,000 new cases a day in the last 7 days through Sunday, which is up from a 7-day average of around 11,000 cases a month ago. So it's more than double.
Yeah.
Right? So cases were already flaring up around the world because of the Delta variant. Traveling has eased up. Mask policies were removed in the States for those who are vaccinated. So you see the spread coming into play here, and that's going to affect mobility if in fact there are lockdowns to be in place, right? And what impact will that have on global trade again? We've talked about inflation being transitory, but hey, if everything's locked up and the supply chain sector continues to remain impacted by it, what's that going to do to the prices of lumber, which you saw grow up? What's that going to do to the price of metals, right?
Yeah.
So these are, and then you can see one of the main indicators of strength in the market is crude oil, right? So that's taking the tumble as well, and that signals to me that demand, they're fearing that demand is going to continue to drop, right? So these are all macro indicators that we have to pay attention to. And one other thing that we mentioned very early on in one of our earlier episodes of the bottom line is the VIX. So you can see the VIX is actually well over 20 now. I think it was up 5-6% today. So volatility is back. Inflation fears are here to stay with the interest rates continuing to drop, and the COVID cases are making people very nervous with the variants, right? So these are all things to keep an eye on, and like I said, that can have a broader impact on the market. And really, if you are bullish on the long-term thesis, then these are the points where you want to buy. But again, like no investor can really confirm like whether it's a good buy right now or if it's going to go down more, right? So you do have to be aware of the macro indicators, and I think the prudent thing to do would be like, okay, you have to be able to try to filter out what do you think is just false narrative, and what do you think is actually real. And I personally think the spread of the variant is actually going to be more and more of a concern, at least for the next few months heading into the fall season. Myself and Syed were talking before actually this episode that it's going to coincide with flu season, which last fall we weren't able to really differentiate between what was the flu and what was COVID. So I think that whole situation might come back into play, and that'll spook investors as well. So multiple things to keep an eye on here, but thought I'd share this article, and obviously we'll provide the link to the article in the description. But again, these are macro indicators that we all have to keep in mind.
Yeah, and we'll talk about this later, but like also like with COVID cases, there's also going to be booster shots and stuff like that. So yeah, we'll save this for later in the segment, but just something to keep an eye out, like you said, with the COVID cases rising, and then that's going to impact the market.
All right, so the second article I wanted to reference actually is Biden's inflation speech, which reflects concerns that rising prices will hurt the Democrats in 2022. So President Joe Biden actually addressed voters who are worried about inflation on Monday, arguing that his domestic spending plans would help keep prices low over the next decade. The short speech reflected a growing concern among Democrats that rising prices could hurt them in next year's midterm elections. Economists believe the price hikes are only temporary. The question for politicians is how temporary. So again, like they haven't actually given a decisive timeline for how long it's going to last. They just said it is temporary, which is anyone's guess, right? But just this article goes on to say, as consumer prices rise across wide swaths of the U.S. economy, President Joe Biden has a message for voters. If you're worried about inflation, you should support Biden's infrastructure and domestic spending plans. To quote Joe Biden, he says, "My Build Back Better plan will be a force for achieving lower prices for Americans looking ahead." Biden argued that the infrastructure and family support investments contained in his $4.5 trillion spending plan will fund decades of economic growth, increase the workforce, and keep prices low. He goes on to say, if your primary concern right now is inflation, you should be even more enthusiastic about this plan. Yet the fact that Biden was addressing inflation at all is a sign of the concern around the growing shift in sentiment among Democrats that rising prices will be a potential political cudgel for Republicans to wield against them in next year's midterm elections. So for now, Biden still enjoys high favorability ratings, and most voters approve of the programs he wants to fund with his two bills, likely because he is printing money, we can say, right, like with all these relief packages being announced. But vulnerable House and Senate Democrats have a good reason to worry about the upcoming year. Republicans already have an advantage, and the historical trends favor the opposition party in the first term after a new president is elected, right? And on top of that, the consumer prices rose 5.4% in June versus a year ago, according to Labor Department figures, the highest increase since 2008, right? And in a recent poll by Demarest and PBS NewsHour, 26% of all adults reported that the biggest concern right now is inflation more than unemployment. And And that's interesting because you see what's happening now is, especially in the industries like hospitality and tourism, for example, there is heavy wage inflation, right? Because really, if you think about the minimum wage worker, they actually don't want to put themselves at arm's length now, right? Or arm's length to work in more of these people-facing roles because of fears of COVID. So what's happened is not only have these industries been impacted just by volumes of consumers not being there, but their input costs in terms of labor have also risen commensurate with that. So it's almost been like a double-edged sword for them where they're not fully able to recover, right? And this is just, again, I think eventually this will settle down, but this is just to say, again, like there's much uncertainty out there as to how long this inflation lasts. And as you continue to increase wages, that puts upward pressure on prices as well. So while you can say, okay, rising wages is actually good for equality purposes, it might actually cause an even further run up in the cost of living, right? And obviously in some of the states where cost of living already astronomical, this will have an even further impact, right? So actually, I wanted to also mention Janet Yellen actually spoke to CNBC in an interview that aired on Thursday, and she actually noted that we'll have several more months of rapid inflation. So not just inflation, but rapid inflation.
Wow.
So it's not just saying that this is a 1 month phenomenon. This is here to stay, right? So when you talk about a timeline of several months, that can have a significant impact, right? And I know we've been locked down for a while, so consumers had to save. But it's going to be interesting with rapid inflation. Like, what are the monthly cash flows of the average American looking like, right? And how is that going to affect consumer spending? How is that going to affect investing in the stock market? Is that going to cause a liquidity crisis anywhere? Again, there's just so many different ways that this can trickle down to. But this is just another article that we're going to provide in the description, and it's going to be interesting to see what the interim results next year are and whether Joe Biden's favorability rating stays where it's at the moment. All right, so the last article I wanted to reference is actually titled WHO officials say that we could have COVID under control next year, quote unquote, if we're really lucky. Okay, so just to summarize this article here, even as the Delta variant rapidly spreads across the globe, WHO officials are still optimistic world leaders could get the pandemic under control next year. As Dr. Mike Ryan, Executive Director of WHO's Health Emergency Program, states, I'd love to say we'll end this year, but I really don't think so. If we're really lucky, we'll have it under control next year. So really what's happening here is they're saying that the pandemic could end sooner if countries ensure the vaccines are distributed equitably to poorer nations, specifically where you can see outbreaks happen like India, for example. You saw a massive increase in cases there. Practicing social distancing and adequately funding hospitals, according to Ryan, who was answering a question from some of one of his colleagues. Countries with high vaccination rates could see the pandemic end sooner for them, he said, criticizing world leaders for not sharing their vaccine stockpiles as much as they could with poorer nations. So in his perspective, the big problem is that we're not sharing enough and we're not being fair, and that's something we should have learned really when we were in school, right? So it goes back to basic principles that, hey, if you have stockpiles of vaccines like the States does, why aren't you sharing them? And you see really in the States now, they've been stuck at 50% vaccination rates. They do have the vaccine stockpiled, but it seems no one else really wants to take them, right? So they're divided as to whether there's health concerns or whatnot there. But in the interim, if they're not taking them, the argument is that why don't you just give them to the poorer countries who are still suffering from rapid spikes in COVID cases, right? And you actually see across the world, in the last 7 days at the global level, there's been an 11.5% increase in cases, and there was a 1% increase in deaths. And in the last week, many regions of the world saw an increase in cases. Europe saw an almost 21% increase. Southeast Asia saw a 16.5% increase. The Western Pacific region saw a roughly 30% increase.
Wow.
And the Eastern Mediterranean region logged a 15% increase in cases, right? COVID deaths have also increased in 4 out of 6 WHO regions in the last 7 days. The Western Pacific saw a 10% increase in deaths. Southeast Asia saw a 12% increase, and the Eastern Mediterranean saw a 4% increase, while the African region is still suffering from a recent spike in transmission, right? So new variants obviously could cause a spike in breakthrough cases, which is still a possibility. The Delta variant, they say, is not going to be the last variant we hear from the WHO, and I think we're hearing about the Lambda variant that's been circulating now as well. But really, the main concern here is that the longer people around the world remain unvaccinated and social mixing continues, the higher the risk of a more dangerous variant to emerge. WHO officials actually cautioned that international travel should only take place if it is absolutely necessary. So you can probably see around, maybe on Instagram, social media, you see your friends going on vacations now just because they've got both the vaccines. But hey, the WHO is still warning international travel should only be conducted if it's absolutely necessary. So if you do have a vacation plan, it's still a good idea. Postpone that. Let's get this under control, not only in your own country or in the city you live, but you want to be ensuring the safety on a global scale, right? And this obviously trickles back into how our global recovery is going to take place, right? If everyone sort of lets their guards down, goes and travels, we're at risk of potentially having another dangerous variant emerge, and it's just going to continue on, right? So this is something, again, all these things are just to say the pandemic's not behind us. You see this in the stock market. Inflation's obviously a concern. The variants are concerned. It's spooking investors, and we're quite frankly far away from a full economic recovery. So this is not the time to be letting our guard down. It's actually the time to take even more precaution, while being grateful that we do live in a country here in Canada where we have had the opportunity to get both our vaccine doses, right? So with that being said, Syed, do you have any questions or any thoughts to add regarding any of the articles we talked about?
Yeah, just to add on to what you mentioned there, I just wanted to remind our viewers, and again, like not a doctor or anything of that matter, both of us aren't, but the vaccine doesn't protect you fully 100% against COVID. You can still get COVID, and I know many people, friends, families, people that I know that have still gotten COVID-19 while being vaccinated, either with the first dose or fully vaccinated. So it doesn't fully protect you, and it just goes on to adding to your point, right? That we got to get it under control. It's not just about your area, your municipality, your city, or your province or your state. It's about your whole country and, of course, the whole world. We got to work in this together, right? And it's going to take all of us together to beat this, help each other out, distribute the vaccines equally so everyone gets a chance at getting a vaccine if they want to, right? And also, I also wanted to remind our viewers that this vaccine won't protect you. It won't protect you like for forever, right? You're gonna have to take another shot. Now, I don't know if it's true, but correct me if I'm wrong, Deepak. But I'm hearing rumors of booster shots coming up.
Yeah. Well, Pfizer's actually applied for emergency use for its third shot, so that's definitely in the pipeline.
Yeah, exactly. So that's going to be there. And then we mentioned this earlier in this episode about flu season, right? And COVID testing is at a point where like there's so many false positives, and I don't know. Again, I'm not a medical expert or anything. None of us are, but I'm always curious to see how they determine the difference between COVID and their normal flu when they do a test, right? Because remember back in I think November 2020 or December 2020, or it could have been earlier in 2021, Elon Musk went to 4 testing centers, and I think 2 of them said he was positive for COVID, and 2 of them said he was negative for COVID. Obviously, it's been 6 months from now since then, but like I'm still not like the false positive rates on these COVID tests really scares me. So and with the fact that the variants, of course, right? So we got the Delta variant, and we also got the Lambda variant, and wouldn't be surprised if more variants come in the future, right? So if you do plan to travel with caution. Obviously wear your mask and all that stuff, and stay safe. I know we all want to get back to normal, but at the same time, we gotta do it in minds of other people. Like we gotta keep in mind that we're still not protected against it. It's not over, and this is evident with the stock market too, right? Inflation and all that stuff. So I mean, it's not over. The battle's still there. I know we all want to get back to normal, but we just gotta hang in there and fight fight this COVID thing together. All right, so on to our last segment for episode 27. We're just going to quickly go over our stock picks from episode 26, and also our stock picks for this coming not coming, but the remaining 4 days of this trading week, as this will be dropping on Monday, July 19th, this episode. But yeah, let's look at Zoom. This is my stock pick. So just looking at the 5-day chart, it did start at 379 and now it's down to about 352. Once again, this was a long-term pick for me because, like I said, right, the new norm is going to consist of video calling and all that stuff because people find it efficient and productive. Again, it depends on person to person. And also with the fear of like another COVID wave in the future, I don't think Zoom's going anywhere. So yeah, that's why I chose the stock pick, not only for the past week, but like a long-term hold. So yeah, I'm going to throw it over to you, Deepak, to go over your picks from last week.
Yeah, thanks, Syed. So actually, I had given the financials ETF, and really over the last 5 days, it's down 3%. This obviously makes sense because the interest rates or the treasury yields actually headed lower. So obviously, the bank makes most of its profit from interest rates, right? So interest rates continue to remain low. That'll impact their revenue. But again, I think in the long term, they're going to have to raise interest rates to control inflation. And if that is in fact the case, then the banks will be beneficiaries of them. So again, this is not just a 1 or 2 week hold, it's a long-term hold, and you can collect dividends from it. So definitely keep this on your radar. The other one actually, which I recommended, and obviously with market weakness, this takes quite a bit of a beating. So with that being said, Tilray is actually down about 16%. I do think the whole weed sector is due for a pop, but again, it actually needs to do that in market strength. Market weakness usually takes these stocks down. So unfortunately, if you were swinging this, then it has given you a little bit of a hit there. But for my current position, I'm actually just dollar cost averaging this because I do think it has a long-term upward trajectory. So I'm using this as an opportunity to add more shares.
Sounds good. Thanks, Deepak. So now moving on to our stock picks for this coming week. My pick is Visa, and the reason I'm choosing Visa is because they have rumors that they're gonna sign a deal, but they're gonna like allow crypto through their platform. So with that being said, like Visa is a good company regardless, right? So it's like I have a position in Visa and I see it as a long-term hold, but like with the crypto news, rumblings and all that stuff, which I'll get into more detail in a few days on our social media. Don't want to take up the time right here and talk about that right now, but there are crypto rumblings and crypto rumors surrounding Visa. So with that coming, I feel like this stock could go up. But again, it's a great long-term hold because just look at the 1-year chart, right? It's up 21% over 1 year. So like I feel like it's a great long-term hold, like I said. And yeah, keep your eyes on this stock. And now Deepak, McDonald's was your pick, so go for it.
Yeah, and again, most of my stock picks for this week are really more so focused on the inflationary pressures and the sort of rising infection rate environment. Just to go back to Visa, I actually wanted to briefly mention before digressing too much. I personally hold Visa as well, and I think it's a great long-term hold. Actually, I don't know if our viewers are familiar with this, but Wells Fargo announced that they're actually getting rid of their personal lines of credit for consumers, right? So one of the main things that drives an economy is access to liquidity and access to capital, right? And if actually more banks follow suit, I don't know what the plans are for the rest of the major banks, but if they follow Wells Fargo's lead and they eliminate lines of credit, most of the spending is going to be through Visa, right? So obviously, already most of the spending happens through Visa, but even more so it would happen, right? So again, this is another long-term hold for me, and definitely great of you to share that where our viewers said. Just jumping back to McDonald's here. So McDonald's is one of those companies that's obviously a staple of the stock market, doesn't actually experience much volatility, and that's for good reason, right? But actually with the market weakness that we've seen over the last little while, it's actually down. It's saying 2.7%. Actually, at its low today, it was down about 4%. So it did recover a little bit from 226. But again, like these sort of dips are actually not that common in a stock like McDonald's. And I think in a rising rate or not a rising rate environment, but a rising price environment, what's going to happen is consumers are actually going to flock to cheaper sources of fast food and what's really better than McDonald's, right? So I think if you are playing the whole fear where we're going to see heavy inflation, then you're probably going to want to diversify your portfolio with these restaurant and fast food companies, right? And McDonald's at the forefront of that. So definitely keep your eye out on this one. And then the other pick I had actually was Pfizer, and this is more so again a play on COVID, right? And with the rising infections, they announced that they're working on getting approved for their third booster dose. So again, this is just recurring revenue for the company, right? And this is something that's you talk about a black swan that kills the market, a white swan actually makes the market, right? So I think this could be considered like a white swan for Pfizer, because for the longest time they didn't have that product that's being demanded by consumers, right? And now everyone, it seems, is flocking towards let me have Pfizer vaccines instead of the other pharmaceutical companies, right? So if that continues to be a trend, then Pfizer would be a great beneficiary of an ongoing, prolonged pandemic and sustained rise in cases. So again, this is not just a 1 week swing trade. This is a long-term hold, as is McDonald's, as is Visa, and as is XFN. So we, in this sort of environment, swing trades don't really work as well because there is a lot of market weakness. So you want to buy strong companies that are going to be around for a long time, that are continuing to grow, and take this as an opportunity to buy them for cheaper prices.
For sure, yes. And that wraps up our stock picks for this week, and we'll cover our picks for this week next episode, and then give you more stock picks next week. So stay tuned for that. All right, so that wraps up episode 27. Once again, thank you for tuning in, wherever you're tuning in from. And if for those of you streaming our podcast, thank you for listening in. And don't forget to like and subscribe on YouTube. And thanks again for the love and support you all show on social media. And with that being said, I myself, Syed, and my co-host Deepak are gonna see you next week. So thank you once again, and we'll see you next week. Take care, everybody, and have a great rest of the week.
Thanks, everyone. Enjoy the rest of your week.